We're looking at the top 6 Platinum or PGE exposed companies on the ASX. They're up between 53 and 80 odd % in the last quarter. Massive movements, and it's more than just what's happening in the futures price. So we're going to drill down into the story about how these companies are connected to the macro or the global theme and what the individual ASX companies have differently. But we want to understand how it all fits together. And it's happening in the context of a momentum trader's dream on the ASX. It's currently the best momentum climate on the ASX than what we've had in over the last 12 months. What you can see on the screen behind me is the members portal that they get to see the daily update at 2 p.m. I'll make it full screen so it makes it a bit easier. And you can see the number 100%, the big purple number in the middle. That's the key thing that we're talking about right now. It tells us that the momentum opportunities on the ASX are better than every day we've had since August last year. So if we're momentum traders, there are an abundance of opportunities for us to trade with, and we want to look at how we identify them in a second. We can also see that, well, there are a lot more companies on the ASX that are above their 50-day moving average. That fits in with the index being high. So this number 100% is a lot more than what's happening in the index. The other report that is critical to look at is the signal strength. And this is going to fit into why we look at Platinum and the leading companies in a bit more detail. This chart here, the top chart, just shows us that the line's going up. All momentum traders recognize a trend, and that is a trend. It's telling us that the existing momentum trades are the best opportunities on the market. Now, when the lines are down here, this actually tells us to look for new leadership and new themes, new emerging leaders in rotation. That's not the case now, and it's been saying that for months. So this is the report that members get, and they get it every day at about 2 o'clock. So we understand that's the current climate that we're working with, and we'll come back and have a look at how we identify the leaders. But what we'll see here is when we load this screen up, we're going to identify the leaders, but we're going to come back and look at that in a second. We want to understand more about the Platinum market. So coming through, we want to understand these best performers. Now here are the top 6. So you can see the weekly performance, the monthly performance, the quarterly and the yearly. So we're looking at 81% for FME and 57% for SPQ. They're all Platinum Group exposed, and we're going to explain about how they fit into the theme in a whole lot more detail in a podcast that members have exclusive access to. So if you want that podcast, you want those reports that we just looked at, click join below and go through it in your own time and really understand that connection. But we also want to understand, well, what's happening in the global market space. These are the futures, and I'll just move my face out of the way so we can see the all-important forward curve. Now, when we're looking at trading commodities on the ASX, not only do we look at the spot price and how it's been trading, and yes, it's up about 66% in the last 3 or 4 months, huge movement. That's part of the reason that these companies are up so much. But we also want to see the futures pointing up. When we have something opposite, like in iron ore, that can be a bit of a problem and doesn't give these explosive movements. So these two are aligning, that's what we want to see, and this current surge here is what's got it to be one of the top themes momentum-wise on the ASX. The other companies that are the market leaders, and we're going to talk about them in a second, because from a supply side, they're all listed here as well. So if you want the codes, that's where they are. Now, we all think, or most people think, that the current problem or concern with the pricing is a function of the floods that happened in South Africa. Now, why South Africa? Well, that's about 70% of the global platinum supply comes from South Africa. And the floods, there were a lot of rains in that area. So it's more than just that, and that's where it gets really interesting. I was quite surprised by what happens here. For you to understand where the global supply comes from, the majority of it actually comes from this area here, so the Bushveld complex. And there's 3 little parts here. It gets quite complicated. Pause if you want to go into detail, with the active mines being the red dots, and that's been shrinking. We'll talk about that in a second. This is the part of South Africa here where we saw that huge amount of rain. So it has affected the supply for 2025, but there's a lot more to it, and how it impacts the ASX companies that we've got listed and exposed. Now, POD, what we're looking at here is this is one of the larger ones from a market cap in that top 6 group. And we can see with the orange crosses when it becomes a momentum leader, and the blue dots are when it becomes an early indicator from our Launchpad. And that's what helps us identify when the new themes are coming up. So when we have a look at the report that we share with members each day, if we go through to POD, it's going to take a scroll because we've got an expansive list here where anyone who wants to go through and filter for companies that are up near 2% within the quarterly high, above 50-day moving averages, relative strength, all of those kind of data, they can be filtered out through this list. And what we want to see with POD, which we've just highlighted here, 1, 2, 3, 4, within the last 2 weeks, POD is shown up in the Launchpad in our lists, and actually it's shown up in the Launchpad 8 days in the last 30. So 8 times it's shown its hand to say this is a potential leader and it's potential for a rally. So that's what this list does, and that's how we share it with members. That's what these blue dots are, the days that it hit the Launchpad. So that's kind of the early indicator. Now, if we go through and have a look, we're going to see that China's now about 64% of the global platinum bar and coin demand. So where's it going? What's happening? That's where the demand is. So it's not actually, there hasn't been a huge change in the demand. It's really the supply that we're going to focus on, and that's why South Africa becomes most people's attention. It's still increasing, and that demand is fairly constant. And we'll talk about what Ford's CEO said just last night, because there's actually an impact that's just happened quite recently as an impact of Donald Trump. Anyway, these are the floods, and it shows that it really has impacted from South Africa. Now, the jobs became a problem before the floods. So what was happening is Valterra and Amplats, they reduced their workforce by 3,700 jobs in 2024. That was February, and then in April, a couple of months later, one of the largest competitors in the same area in South Africa, Impala, they reduced 3,900 jobs, and that was in April 2024. So we're seeing that there's a reduction in the workforce. So why was there a reduction? And it wasn't to do with the floods. This is before the floods. So it was all triggered because there was a 70% collapse in profits in 2023 before the job cuts were announced. And that had a 35% decrease in the PGM dollar basket price. So kind of the price that they're getting on the global market. And that's what we're going to look at here, sort of the global market, the spot price. So we've just zoomed into this period before, and that was 24-25. But if we look back sort of the last decade, we get an idea of how the platinum market has moved. And this is going to help explain how the number of holes has dropped, because the prices are only back to where they were sort of 10 years ago, but it hasn't been there for a very long time. Now, when the job cuts were happening, this is the sharp drop we're seeing in the price here in 2023 that led to the job cuts announced around this period in the start of 2024. So in the grand scheme of things, it seems small, but actually we're going to see how tight these margins are and why that is important for not just the current supply, but the future supply. Now, global data tells us that the production shortages that we've had have actually been for the last 3 years. So they had, because of this massive drop here in prices, it was looking to be a supply shortage just because so many mines were shutting down, the jobs are being cut. So there's years of cost pressures and declining profitability in this little part of the chart here that led to the reduction. Then you add in the floods, which are quoted as once in a 100,000 year event, because approximately 30 millimeters of rainfall in 24 hours was just beyond what the river systems could handle, and we saw that with those pictures. That was just the part that really pushed the prices, the production side down, I should say. But it also exacerbated. So the share price didn't reflect it straight away, because the floods caused things like power shortages, rising costs in South Africa, regulatory uncertainty, and operational inefficiencies around that whole picture. So it wasn't immediately when the floods happened go in and buy, because their productions were shut down. So that's where the ASX listed companies' other domiciled assets become favoured. There was global data, they had a 6.4 decline forecast in the production for 2025, and that looks like it will actually be the case. Now, the number of operational PGM shafts fell from 81 in 2008, so prices are back further to the left of this chart, to only 53 in 2025. So that's a reduction of supply in the market, which is good for prices and good for existing producers. But the existing producers have a problem. So they have pretty short remaining lifespans of most of those mines and most of those shafts. There's insufficient capital investment, no surprise because of this reduction in the spot price. And then years of cutbacks due to these low prices. So that's underinvested. We've seen that many times before with many other commodities. Now, the report says that the global platinum market is currently navigating through unprecedented territory as it faces its third consecutive annual deficit in 2025. That's the supply that we're talking about. Now, the WPIC research from March of last year, they indicated that platinum market is entering a period of consecutive deficits from 2023. So they knew it was coming, but the underinvestment was a function of the low prices. The underinvestment still needs to make the industrial demand, we should say. Now, depending on the reports, it's somewhere between 33 up to 40% is actually going to the auto industry. So these are things like catalytic converters, and that's controlling emissions, internal combustion engines and hybrid vehicles. Interestingly, that just last night, Ford have done an about face and said EVs is not the full future, hybrids is really the future. That's exactly what Toyota said about 10 years ago when Volvo and other companies pointed the finger at Toyota and said, you're behind the times, EVs is everything. So it's interesting to see that the industry has shifted and internal combustion engines through hybrids are actually the demand. Now the catalytic converters become in more demand the more internal combustion engines that we have. More EVs, don't really use the catalytic converter. So that's the largest part of the market. Yes, there's jewellery demand, that's been increasing, and there's industrial usages. That's quite, well, we'll have a look at the industrial usages because you can think of computer hard disks, multi-layer ceramic capacitors. It's also thinking about the green energy transition. So we're looking at PEM fuel cells. So platinum catalyst enablers hydrogen fuel cells. Think of heavy-duty trucks and buses, stationary power, data centers, and mobile phone or cell phone towers. The masts, they also use platinum, so that's part of the industry demand. And then there's also PEM electrolyzers. So platinum being the cathode and iridium being the anode enable water splitting for green hydrogen production. So think of that green future that we're hearing so much about. It actually requires platinum. So you've got to dig a hole in the ground to get your green future. These are the miners that we're talking about. Then you also have other things like pacemakers, defibrillators, surgical instruments, glass manufacturing, petroleum refinery. They also use platinum. Now, the supply side is the problem here, and the supply side is the main part of the story. That's what we need to understand for the ASX listed companies. So here's a picture of platinum mine over in South Africa, because we're going to look at the all-in sustaining cost. This is critical. If we're going to be trading this, we need to understand what we're really trading for, where our exposure is. Now, Valterra Platinum, they're the world's largest. In the first quarter of 2025, their guidance said that their all-in sustaining cost is around about $1,000 US per ounce. Now, their actual was 962 that came out, and that was excluding the flood impact. If you include the flood impact, it was about 1,200. These numbers are important because it tells us the future of the market. We're just telling you where the lowest cost is, and this is the largest producer, Valterra. Now, the first quartile, that's where they sit. The worst, the fourth quartile, the highest cost, they're at $1,200 US an ounce. Now, if you remember from the chart, we've only just come back to prices above 1,200. So most of them are only just, and we'll quote here because this is important from the CEOs who are running these companies, the 4 largest platinum producers, how they're currently seeing the industry, because this really impacts the ASX listed companies that are not really producing. So we've got industry experts suggesting that prices need to consistently remain above $1,500 to $1,700 per ounce for the existing operations to be sustainable. So that's the current market supply that we've just looked at. New project development, that requires $1,800 to $2,000. We're not near that yet. So new projects are not coming online in the current market. Why? Well, we've just looked at all-in costs for the existing producers that generally have a lower cost, even though they're getting to the lower end of the mine life. So that's what's required for the long-term capital investment for 10 to 20 years, $1,800 to $2,000 per ounce. Industry CEO, so we've got Northam Platinum CEO, Paul Dunn. He emphasises that current prices are, quoting him here, still not yet at levels that will support sustainable mining across the industry, and certainly not the much needed development of new operations. Then we've got Valterra CEO Craig Miller. He said that about 90% of the industry is now making money or just breaking even. And that was when it was at $1,200 per ounce. We're above that now, just in the last couple of days. Then we've got Impala CEO Nico Muller. Now in August, so a bit over a month ago, he said, we do not support a flood of new ounces to increase the supply. We don't think there's any sense in oversupplying an oversupplied market. So we're not there yet, but they don't want to add to it. Interestingly, Impala, now they actually have somewhere in the middle ground. Remember how we're saying that the highest end of the cost curve is currently $1,200 an ounce around the current prices? and that new investment requires it to be closer to 2,000. There's a middle ground here, and this can really impact the ASX listed companies. If this happens, and Impala CEO is really the one to be the announcer here. If prices continue rising, Impala would consider restating life of mine extension projects and potentially rethink their Canadian palladium mine closure that was set for 2026. So that's sort of taking the supply out of the market next year. If palladium is sustained around $1,400 an ounce, which is where we are, we're very close to. So if we're trading these momentum companies, and we want to be trading these ASX listed companies where they're at their best, this is the biggest hit that could possibly come to the market. If that is announced to be reopened or continued, that supply can actually jump up. It's also geopolitically more stable, and then not as subject to the issues that we've just talked about with the mine life and floods that have been happening in South Australia. So that's the current state of play. If you want to have a look at the top 6 companies, here are the codes. I'll put them on top for you back on the screen. So you can see they're the top 6 companies on the ASX. They're the best performers right now. If you want that podcast where we drill down into more detail for these individual companies, their reports, their current positions, and how they're best suited into the current theme, then click join below. You can get that podcast. You can see it in more detail. If you want the assistance of this filtering process or understanding when is the optimal time to be investing and how good are the momentum opportunities, then you can also get this report. Click join and you can get these reports that all the other members get. And then you can also just click subscribe for the updates. If you want to learn more about momentum trading, or the whole educational playlist on the right hand side, and then there's also a whole top 6 series where we go through other themes like this and the leading thematics or leading companies on the list.